welcome viewers to yet another episode with Dr. Wilson on our weekly Wilson podcast. How are you, Doc?
Yes, good morning, all. I'm good. Good morning, good afternoon. We are just on that note. We're moving next weekend to daylight saving, so you're all going to lose an hour's sleep. Well, those in the lower eastern seaboard states, and we're talking about New South Wales and Victoria. Of course, Queensland will continue to go it alone. No daylight saving there, but I'm up in Queensland for another Infinity event next Friday week, tomorrow week. So, Friday the 11th, I think. So we can enjoy the movement from capital city to capital city.
It'd be great to have you on board again, mate.
Yes, that's right. So anyway, that's what and of course it means that summer's just about here, with daylight saving. And I'm down in Melbourne today, and it's very summery here today. Lovely weather. But we really moved for the year. It is October. Hello. So happy October, everybody. We've just about got past all the sporting distractions, and we're into school holiday mode again. So these are the lengthy, I guess we call them spring school holidays, that are just about happening everywhere or about to start in most states, which means there's a little bit of a distracted market in terms of the housing market. We've seen that in our weekend auction results, which we will look at the end of the show today. But look, overall, we've got some interesting news. We've got the latest home price news for September, hot off the press. Of course, we're just into October, and here we are with the September prices. But My Housing Market are always first with the monthly house price data. So some interesting results there. But in terms of the economy, we've had a remarkable production or report for inflation over August from the ABS, and we've sort of predicted this a little bit here, a very sharp fall in inflation. So in terms of the outlook for interest rates, if those that are looking for lower interest rates, and of course most of those with mortgages would be welcoming lower interest rates, but this certainly now starts to push momentum towards that particular prospect. We were concerned for a while that interest rates may have to rise because inflation was rising, and it was rising consistently. But that was on the back of higher oil prices, and that's what we've seen, a big change in the nature of oil prices, which have fallen sharply. However, all bets are off, unfortunately, with what's happening in the Middle East, and let's hope that doesn't work its way into the usual outcomes, or the sort of outcomes we expect, which is higher oil prices, which unfortunately will work its way back into higher inflation. But we'll look at where oil prices are going as part of that review of the latest inflation data. But look, it really was a very sharp decline. It wasn't just about oil prices. It was also about electricity prices, which fell sharply. And that's a response to the government policy announced in this year's budget, which was those handouts for households for their electricity bill. I think it was a $300 household, a handout for electricity account per household. And of course, that's had a big effect on the price of electricity as measured by the ABS, and that's been a significant factor in pushing down the inflation rate. I'm not sure we're going to get lower interest rates this year, but it does start to take the conversation in regard to higher interest rates off the table. But we still have some way to go before we are consistently in the band that the Reserve Bank wants inflation to settle in, and that's the 2 to 3% target range. Still got some way to go there, but we're heading in the right direction. But we've got to remember the Reserve Bank has said they want it to be consistently within the target range. So we're still not there. So even if we do get there over the shorter term, it'll have to stay there for a little while, I think, before we get lower rates. And as I said, also that the Reserve Bank, we've discussed here, are looking at the quarterly inflation data rather than the monthly inflation data. So it means we're going to have to wait 3-month periods to get the information on inflation that the Reserve Bank will act on. So look, given those circumstances, I still think we're looking into next year before we could even start to consider lower interest rates. But the data's moving in the right direction so far, and we're talking 1 month's data. So let's take that with a grain of salt. But I've rattled on a lot about inflation, which we'll get to in just a second. So I guess we should start our show today. So here's our latest information for this week, the first week of October, which we've just commenced, from My Housing Market. My Housing Market works in conjunction with our good friends at Infinity to provide all the latest information on the housing market. We are independent consultants and commentators on the housing market. We also provide our own in-house data, so we compete with the other data models in the marketplace. And we're all about the current state and future prospects of your housing market out there. Current being the operative word. We try to look at, that's why I do this weekly report, bringing the latest information so you can make your decisions based on what's actually happening rather than looking too far backwards in time. So this is the week to Wednesday, October the 2nd. As I said before, happy October, everybody. We're really accelerating towards Christmas, aren't we? It's just 3 months till Christmas, less than 3 months till Christmas. Can you believe? And we're now in the, I guess, the middle part. Well, we are in the middle part of the spring selling season. Typically, when we get the AFL Grand Final, the NRL Grand Finals behind us, that sort of marks a punctuation point in our housing market activity. But we'll discuss that a little bit further when we look at the latest auction results. So this week, we're going to look at the September house and unit prices, as discussed, the latest inflation rate from the ABS over August, and the latest weekend auction results. So house prices, again, on the rise, higher again over September. The national weighted average, and this is the capital city weighted average house price. So what it does is it creates a weighted average based on the number of sales in each particular capital city. So obviously it's skewed towards the larger markets such as Sydney, Melbourne and Brisbane. But nonetheless, it gives us an overall view of what a national market performance would be, because really there is no such thing as a national house. But national house prices did rise again over September. That's now 19 months over the past 20 months that we've had an increase in national house prices. So that's a pretty solid performance, pretty consistent performance. And again, it just reinforces the robust and resilient nature of Australia's housing markets. And of course, this has been in the face of a concerted period of higher interest rates and rising interest rates. So house prices are higher again over September, but we are still seeing that fragmented market consolidating. And that's the big three. And I say that in terms of market activity. Perth, Brisbane and Adelaide are all continuing to outperform the other capital city markets, particularly Perth and Brisbane over September. Sydney, not so strong. Sydney's really reached the peak of its affordability cycle, which means prices have risen to the point where buyers are being restricted, not so much because of lower demand, but just because prices are at a point now where they just can't, incomes are not keeping up with them. But the other factors in regard to that Sydney market particularly, which continue to show that it's a solid to strong market, that we're getting still very robust clearance rates. Listing numbers are high, auction sales numbers are high. So there's plenty of buying and selling happening in Sydney. It's just that the Sydney market doesn't have the capacity to push up prices anymore, given that, we know that the Australian housing market, one of its beauties is the fact that it has those barriers around it, because bank lending criteria are quite strict. So that means we can't over borrow. And in a sense, that's what's happening in Sydney now, where prices are around about 6% above their previous peaks. But as I said, even though prices growth has eased in the Sydney market, there's still plenty of buying and selling happening there, and confidence is still high. The Melbourne market's still moving a little bit sideways. We're looking for a revival in Melbourne. We've been looking for it over the spring period, which is typically a positive period for the Melbourne market, which reflects the higher priced areas in Melbourne, inner east, inner south, and inner city, the prestige markets in Melbourne are usually very active through the spring period. And it's been those markets that have been dragging the chain in the Melbourne market, particularly over the last few years. But we're really still not seeing any drive out of those markets so far during spring. And the Melbourne market is still just trundling along with modest growth results. But we await to see what happens over the remainder of spring. The smaller markets, Hobart, Darwin, and Canberra, continue to be the underperformers there, with prices growth continuing to ease. But the prospects are still for, particularly for those Brisbane, Perth, and Adelaide, are still very positive for more strong prices growth through to the end of the year in those markets. We've got to understand the reason we're seeing that breakaway from those smaller markets. Obviously, firstly, Brisbane was and Adelaide and Perth to a lesser degree were influenced by a surge in migration through the COVID period. That's really built a lot of momentum, increased confidence in buyers and sellers in those markets. And when we look at prices and income comparisons in those particular strong capitals, you can still see affordability as a positive, because incomes are reasonably similar in Brisbane, Adelaide, and Perth compared to Melbourne and Sydney. And yet house prices are lower. So affordability is still a positive in those capitals. And that's what's continuing to fuel higher prices. It's the capacity of affordability advantages to push up prices and to keep markets moving along. And of course, confidence is fueled by higher prices. And as we've seen with the lending data, there's a lot of investors now starting to move into those Brisbane, Adelaide, and Perth markets, and other markets too, attracted by higher rents and higher prices. So we look forward to the remainder of the spring season. We're now moving into the middle part of that spring selling season, but the prices are continuing to rise. You can see there, that's the chart of the national weighted average median capital city house price. That's a mouthful. What we measure here is the 3-month period up till September. So that's 3 months of sales for houses. And then we compare it to the 3-month period to August. So it's a rolling quarterly average, rolls every month. So it gives us lots of data to make sure we've got a reliable data set. But we can see the trend because we see it how it moves from month to month, not from quarter to quarter. So it gives us more of a revelation of what the trend is. And as I said, we've had 19 of the past 20 months of those quarterly rolling house price models have been positive. So again, robust and resilient Australian housing market. So this is the data. Sydney down slightly over the month, down 0.3%. Melbourne up 0.3%. So some positives there for Melbourne, up 0.3%. Brisbane 0.5% increase. Adelaide 1% increase. Perth, again, the leader of the pack, up 1.2%. So, that real breakaway that we've seen. National house prices 0.3% higher. But Sydney, as I said, just starting to ease a little bit from its recent very consistent, solid growth. And as I said, I think we're looking at affordability reasons there as the cycle peaks out in the Sydney market. Over the year so far, Sydney up 4%. Melbourne still down a little bit this year so far, 0.7%. Similar result over the past year in Melbourne, where prices have basically flatlined. Prices over the past year in Sydney up by 5.4%. When we look at Brisbane this year, this is the big difference in all the capital cities, is when we look at, as I said, Brisbane, Adelaide, and Perth. Brisbane up 10.8% this year so far. Adelaide up 12.9% this year so far. Perth up, 19.1% this year so far. And we've still got 3 months to run. But when we look at the yearly data for that, I guess we call them the big three, that reveals it all. Brisbane's median house price up by 16.2% over the past year. Adelaide up similarly, 17.3%. And look at Perth's 26.9% increase in Perth's median house price over the last 12 months. So if you're a Perth homeowner, you'd be smiling from ear to ear with those results. But of course, Perth was down for some time. So it's a little bit of a catch-up market there, but still a very good result. a spectacular result over the past year in Perth. And look at the last 2 years in Perth. Median house prices in Perth up by 40, yes, 40% over the past 2 years. Smaller capital cities, not so profound, as I said before. They've been really dragging the chain and moving backwards. In fact, Hobart, Darwin, and Canberra all have lower prices over the past year for houses. Yeah, look, a little bit of a fractured market there, we'd say. Sydney and Melbourne, yeah, middle-ish type of results. Brisbane, Adelaide, and Perth, boom time results in those markets, and Darwin, Canberra, and Hobart have moved backwards and continued to ease. So that's houses. Let's have a look at units. A little bit of a different story in units. We saw units fall away over the September quarter. So the median unit price was lower over September after quite a good rise the previous month for that quarterly data set. And the reason we've seen lower unit prices is because, as I mentioned previously, this is a weighted average model of national house prices, capital city weighted average, and very much influenced particularly by Sydney and also by Melbourne, because that's where the majority of unit sales do occur. So that's where the weighting is at its highest. So it does influence the national pricing. See there, Sydney unit prices similar to houses, down by 0.5% over the month. So that's the September quarter versus the August quarter for median prices. Melbourne also down just slightly, 0.1%. So Melbourne basically flat over the month. But again, we're seeing that the better performance from Brisbane, or the best performance from Brisbane and Perth, up by 1.1% for units, and Adelaide down by 0.3%. Adelaide and Perth are smaller unit markets. They tend to be a little volatile, but Brisbane is a significant unit market and continues to perform very strongly. That Brisbane inner city apartment market is got way too much demand for supply, which is a lot different to the narrative that we had there for a while, where it was going to be flooded with unsellable units for in Brisbane for decades, as some of the hysterical predictions. But now there's a chronic undersupply, and that's driving this year so far higher prices by 22.1%. Brisbane unit prices are higher this year so far, and over the past 12 months, Brisbane unit prices up by 24.5%. Adelaide, 21.1%. And Perth, as with houses, is the strongest performer, up by 26.9% unit prices in Perth over the past year. But when we look at over the past 2 years, Brisbane's really broken away. Broken away from the major capitals, up by 39.5%. So let's say it again. Brisbane unit prices over the past 2 years have increased by just under 40%. Gee, how's that for a dividend? So all those that ignored the doom and gloom, the usual nonsensical doom and gloom about oversupply in the Brisbane unit market, they'd be rubbing their hands together in glee at those rivers of gold that they've accumulated over the last 2 years. Not really to be outdone. Adelaide and Perth also up nearly 40%. So a real, fragmented housing market environment. Sydney units over 4.2% over the past year. Melbourne units are higher over the past year, up by 1%. But certainly a tale of two real disparate housing markets, capital city housing market sectors, with again in the unit market, particularly Brisbane and Perth, well ahead of the performances of the rest. So some good news there for some homeowners. And as I said, we're still awaiting a revival, particularly in that Melbourne market, and some degree from that Canberra market as well. But we've still got 3 months of the spring selling season left, so we'll see what that brings in terms of a revival in those markets. If you are looking for the full copy, the PDF copy of the My Housing Market report, September quarter house price report, there is a QR code on the screen which you can scan, and that will take you to a link directly to that to that report. So get a hold of that one. Okay, so that's our housing market or house price and unit price report. Interesting stuff there, and clearly interesting to discuss the trends that have emerged. So yes, the latest economic data, as we've discussed to some degree, August inflation was sharply lower. Headline inflation, which takes the headline inflation, which includes all the data sets, all the various bits and pieces of the ABS basket of goods that are measured to give us an overall price measure for inflation, down to 2.7% over August, which is significantly lower than the 3.5% over July. So we've gone from 3.5% to 2.7% over the month. Now that's a really big fall, and there are reasons for that are to some degree not likely to be repeated over coming months. Now, underlying inflation, which takes out the volatile elements such as fuel and food, it fell also down to 3.4% from 3.7%. Now, underlying inflation is the measure that the Reserve Bank uses for its interest rate decision making. The target's 2 to 3%. We're at 3.4% now. As I mentioned, the Reserve Bank wants to see a consistent period within the target range before it starts to think about cutting interest rates. That's what it's told us. And it also wants to look at the quarterly data, not the monthly data. So we have to wait for the 3-month data sets. The next one will come out in November, which will be the September quarter one. And so it won't really be timely in terms of the November decision for interest rates, which occurs on Melbourne Cup Day. And it would have to be, a one-off in a sense of a period of lower quarterly inflation rates for the Reserve Bank to start to move. But nonetheless, this was a really sharp decline. When we look at the contributors to inflation, again, it was housing up by 2.6%, but that was a better result. So that's the price of how housing costs or prices are measured over a year. So they are up 2.6% over the year to August, which compared to 4% over the year to July. So that's a big improvement. And there are two factors that are driving that. We are starting to see some moderation in rental increases and a little bit more rent supply, a little bit less rent demand, and one drives the other, of course. And now whether that will be sustained or not, we'll find out to come. Now, next week, we are going to look at the September rent report for houses and units. So we'll see if that consolidation of a better market for tenants with an easing in rental growth and higher vacancy rates continues, and it's not just a seasonal process. But so housing looking a little better, and food down a little bit compared to the previous annual result over July, up 3.4% compared to 3.8%, so some improvement. But hey, let's look at the reason why inflation just collapsed over August. And it was, as we've discussed at length here for a long time, the relationship between the cost of fuel, of oil, and inflation is quite profound. It's very significant. The price of fuel, right, over the year to August actually fell 7.6%, which compared to a 3.4% rise over the previous month. So that's had a huge impact on the inflation rate. And we said it would because we've been tracking the price of oil and we know what it is compared to the year before because it comes out well before the inflation rate is released. So we can project what will occur because we know that it has a significant impact. But the real driving force for that sharp fall in inflation was a collapse in the electricity price, down 17.9%. Now, that's a record change over a period of time, and that's because of the government subsidy that households got that I announced in the budget, which is $300 a year off every electricity bill, and that has had a huge impact on the price of electricity on a year-on-year basis. Now, we must point out that this is a one-off, so it's not It's not something that's going to continue, but it certainly had a big impact over August. And as I mentioned, underlying inflation is still well ahead of the target range. Still got some work to do before we start seriously discussing lower interest rates. And that means we need at least a couple of quarters well within that target range. We're some way off there, but hey, we can actually be a bit more optimistic now that we are heading in the right direction. Now, one caveat to all this, and when we do look at the chart, you can see how underlying inflation really has fallen away over the last 3 months. So good news there for the direction. But even though the US did reduce its interest rates last month by a full 0.5%, which was a sharp decline, their interest rates are still well ahead of ours. So in the scheme of things, our interest rate is still low compared to the US, and yet our underlying inflation rate is well above the US, which is at 2.3%. So there's a disparity there, which gives us not a lot of confidence in the short term, anyway, that we'll follow a cut in rates what the US has done. So as I said, one of the key common elements to inflation changes is the price of oil. So let's have a look at the price of oil there. Can't you see how closely changes in the price of oil tracks changes to the inflation rate? Now, we know what the price of oil over September is. So this is the average price of oil over September. And it's continuing to fall, $69. However, over the last couple of days, we're starting to see the price of oil pick up again because of the issues that are happening in the Middle East. But there are other positives in regard to the prospect for oil. Saudi Arabia has said that it wants to now get rid of it had a target, Saudi Arabia, of $100 US a barrel for oil. It's now abandoned that target. I think it's worried about actually reducing demand because of higher oil prices, and also being competed by other oil producers with lower prices. But so that's a good thing that it's not locked into its previous policy of targeting $100 US a barrel. It's tracking at $69 at the moment, but it has risen above $70 US over the past few days. But as I said, given what's happened over September, comparing it to where it was last year, we can look forward again to another drop in the inflation rate, because the price of oil has fallen 22.3% over the year to September. Now, that'll have another big impact on our inflation rate. So we'll get another good result, I think, when we get the September inflation rate released just under a month's time. So some more good news coming there in terms of battling inflation. However, October might be a different story if things in the Middle East go a little haywire and start to affect the price of oil. But certainly we can look forward to another, I think, good month in terms of the inflation rate and the prospects of down the track at least having a more legitimate conversation about lower interest rates. And this is the oil price. You can see how it has started to ease with a recent trend, but that's up to a couple of days ago, and we're now starting to see that pick up again. But clearly, the international price of oil has been what's impacted inflation globally, and what's been a significant factor in the US being able to also cut its interest rates because it's got within its target range. But there are other factors that are different in the measurement of inflation in the US compared to Australia, particularly housing costs. So we've got to keep our eye on the price of oil. That'll tell us what's going to happen with inflation, which will tell us what's going to happen with interest rates. So quickly, just the latest data on the auction market. Of course, last weekend was the AFL Grand Final, beginning of school holidays in some markets. So they're distracted markets, just a handful of auctions in Melbourne, no surprise. But we still had some pretty fair results given those distractions. We will see the auction numbers start to pick up again over coming weekends. So again, the markets will be tested, and there'll be plenty of choices for buyers going forward. This is the data, big number in Sydney. Of course, next weekend in Sydney is a public holiday. So there was a bringing forward of activity to avoid the clash with the public holiday and the beginning of school holidays. Big number of auctions there, near record auctions in Sydney, 1,167 auctions. And what a great clearance rate for Sydney, given all those auctions. And the weekend before, there was 1,000 auctions. So just under 70% clearance rate in Sydney, very similar to the weekend before. So as I said, even though overall prices eased in Sydney over September, there's still plenty of buying and selling happening in that Sydney market. A lot of confidence happening. So it's not a market really there which is seeing a reduction in either supply or demand. And if you look back to last year, you can see such a big difference in the number of listings and the clearance rate now, which is tracking higher than a year ago in Sydney. Melbourne, grand final fever, well and truly in action in Melbourne, just 129 auctions. Same clearance rate that the weekend before over there, pre-grand final Super Saturday. Similar numbers to the same time last year, but the clearance rate was actually higher than grand final day last year in Melbourne. Brisbane's just moved a little sideways lately. Had another lower clearance rate, Brisbane. It bounced back last weekend, but the weekend before that, we had a 40% clearance rate. Auction numbers quite significant in Brisbane and well ahead of the same period a year ago, where we still had that ultra boom market happening in Brisbane with a clearance rate above 60%. Adelaide also distracted by the AFL grand final. Clearance rate down a bit with lower auction numbers, but still a good result there for sellers. And Canberra, not so bad. Similar numbers of auctions and a similar clearance rate. Still waiting to get a consistent period above 60% for that Canberra market, which has been threatening to do that for a while, but it's still teasing us a little bit for those prospects. So Sydney, hold the trend for Sydney monthly, holding above 70% over September. So similar results to August, so holding firm that Sydney market. Melbourne also not so bad. It's been in the mid-60s really for most of this year, that Melbourne market. So just waiting to break above 70. We'll see if that will occur during spring, as we've discussed, as it rolls forward. Yeah, Brisbane, a little bit of a surprise, an underperformance through the September market compared to where it's been. Let's keep an eye on that Brisbane market, but the prices data is still very positive in Brisbane. So it's really not translating into anything in the bigger picture in terms of prices. Adelaide remains Australia's strongest capital city auction market, 77% clearance rate over September. And Canberra, just hasn't matched what was a good result over August, which we were thinking, well, maybe that's going to herald a revival in Canberra, but no, it's sort of tracked backwards over September. So again, it's a little bit like 2 steps forward, 1 step back for that Canberra housing market. If you're looking for a copy of the capital city auction results, you can get the snapshot on my LinkedIn site, Dr. Andrew Wilson at LinkedIn, every Saturday night around about 6:30, and that gives you the capital city clearance rates, the capital city listings, and the comparisons to the previous week and the same weekend last year. And on Sundays, you can get the full national auction report, which includes the regional breakdowns for Melbourne and Sydney, and also the top 10 sales in each of the capital city markets. So get that on our LinkedIn channel, Doc Andrew Wilson at LinkedIn. If you missed that last week's report, there it is there. So you can scan that and get a link to the last weekend's national weekend auction market report. As we always do, we'll finish off with our My Housing Market Infinity app. Again, you can scan that. It is password protected, so you have to go through Infinity to get hold of the password. It's a great little app. It gives you the asking prices, asking rents, and the listings data for every suburb in Australia that has data. It's updated daily, so you get all the latest data. There's a screenshot of what you get. Cute little app to put on your phone. You can filter it for price or rent. You can filter it for the capital city region or the outside capital city region. We're looking at Blacktown there for our target suburb. You can filter for house, units, or townhouse, and also the number of beds. And it gives you not just the median price, but the high and the low price, current asking prices. So it tells you what the market's thinking about prices at the moment and the number of listings, and it does exactly the same thing for the rental market. So get a hold of that one. And as I said, it's password protected, but Infinity will tell you how to access that password. Next week, I've mentioned September house and unit rents. Very interesting whether we will see a continuing trend in an improvement in our rental market. Still very tight, but looking slightly better. So let's see what happened over September. We've got the latest August building approvals, maybe just starting to show a bit of light at the end of the tunnel in terms of resupplying Australia's chronically undersupplied housing markets, particularly in houses. But I'm not sure the position for units, which is probably more important when we're looking at getting more balance in our housing markets to get more apartments up. I'm not sure we're seeing much results then. Of course, the latest weekend auction results, which will be affected a little bit by, of course, the New South Wales public holiday and also school holidays. But we will start to see that's the beginning of the midsection of our auction season, our spring auction season, which begins following the end of the AFL Grand Final and the New South Wales public holiday, and then it works its way up to Melbourne Cup Day, which is the day when the mid part of the spring, the weekend where the mid part of the spring selling season ends, and then we get into the final period, which runs us up to the third weekend in December. So something to look forward to. If you want to get a copy of our report this week, there it is, QR code scan. Good luck with that, and enjoy your weekend or your week ahead until we meet again with October's episode number 2 of the Wilson Weekly podcast, which is fast closing in on its 100th episode. So look forward to that one. So there we go.
Thank you once again, Doc, for your comprehensive overview, and look forward to next week.
Thanks, mate. See you then.
See you guys.
Yep.